empowering your financial journey. Hey there, savvy investors. Welcome back to Money Matters. Today, we're diving deep into the treasure trove of knowledge that is Warren Buffett's investment playbook. I mean, who hasn't heard of the man who turned a small sum into billions, right? We're talking about the Oracle of Omaha, the legendary Warren Buffett himself. His investment career spans decades, and his success is nothing short of awe-inspiring. But what's his secret sauce? What are the strategies that have kept him at the top of the investment game for so long? Well, my friends, today is the day we're pulling back the curtain on Warren Buffett's best-kept investment secrets. Whether you're a seasoned investor or just dipping your toes into the market, this video is packed with insights that can transform your approach to investing. So, stick around because by the end of this, you'll be armed with some of the most powerful tools in the world of finance. I'm Tony, and I'm thrilled to be your guide on this journey. So, grab your notepads, get comfy, and let's uncover the wealth-building strategies that have made Warren Buffett an icon in the world of investing. Let's dive right in. Absolutely, let's dive into the mindset of a successful investor. Alright, folks, when it comes to investing, one of the golden rules straight from Warren Buffett's playbook is this: think long-term. I'm talking about looking beyond the daily market swings and focusing on the big picture. You see, Buffett's success wasn't built on quick wins, but rather on patiently nurturing investments over time. Now, let's talk about value investing. This is like the heart and soul of Buffett's strategy. Picture this: you're at a store, and you spot a top-quality product on sale. You know it's worth way more than the price tag. That's what Buffett does in the stock market. He looks for companies that are undervalued, gems hidden in plain sight. He's not into the hype or the latest trends. Instead, he's all about finding those hidden gems that have strong fundamentals, solid earnings, and a competitive edge. It's like being a smart shopper in the world of stocks. Now, let's chat about something that might not sound super glamorous, but boy, is it crucial: patience and discipline. Imagine you're on a road trip. You've got a clear destination in mind, but along the way, there might be some detours and slow traffic. It's the same in investing. Buffett stresses the importance of sticking to your plan, even when the market gets bumpy. That means not getting swayed by short-term market noise or the fear of missing out. It's about having the discipline to stay the course, to let your investments grow and compound over time. Remember, it's not about sprinting to the finish line, it's about the marathon. So, there you have it. The mindset of a successful investor according to the Oracle of Omaha, Warren Buffett. Keep that long-term perspective, focus on value, and don't forget to bring your patience and discipline along for the ride. Stick around, because we've got more investment wisdom coming your way. Alright, let's move on to a game-changer in Buffett's strategy: the power of research and due diligence. Picture this as your pre-flight checklist before taking off on an investment journey. Buffett doesn't just throw darts at a board and hope for the best. Oh no! He dives deep into a company's history, management, and competitive advantage. It's like investigating every nook and cranny before making a decision. This level of research is what sets the pros apart. But hold on, it doesn't stop there. Buffett has a set of metrics and indicators that are like his compass in the investment world. He's looking for companies with a durable competitive advantage, like a castle with a moat around it, protecting it from competitors. He's also got an eye for companies with consistent and predictable earnings. It's like having a reliable friend you can count on. These are the kind of companies that tend to weather economic storms and keep churning out profits. Now, let's put this into action. Take a look at Buffett's investment in Coca-Cola. He saw the brand's immense power, the addictive nature of its product, and the global reach. He didn't just stop at the surface, he dug deep and saw the long-term potential. And boy, did that pay off. And that's just one shining example of how thorough research and due diligence can lead to incredible investment success. It's like having a treasure map, and every detail counts. So, remember, my fellow investors, research isn't just a suggestion, it's a secret weapon in Buffett's arsenal. Dive in, Get to know your investments inside out, and watch your portfolio thrive. Stick around because we've got more pearls of investment wisdom headed your way. Now, let's talk about a crucial aspect of Buffett's success, the art of risk management. It's like playing chess, thinking several moves ahead before making a move. Buffett doesn't just jump into an investment blindly. He carefully weighs the risks and potential rewards. It's like being a seasoned captain navigating a ship through unpredictable waters. He looks for businesses with a competitive advantage and a solid track record, reducing the chance of a sudden market storm. Now, here's a term you'll want to remember, the margin of safety. Imagine you're building a bridge. You don't cut it close to the weight limit, right? You leave room for unexpected loads. That's the margin of safety. It's a buffer, a safety net that protects your investment from unforeseen hiccups. Buffett's all about making sure the price you pay for a stock is significantly below its intrinsic value. It's like buying $1 for 50 cents. This approach reduces the downside risk and gives you a cushion in case things don't go as planned. Let's take a look at Buffett's investment in American Express back in the 1960s. The company faced a crisis, but Buffett saw its strong brand and loyal customer base. He understood that even in tough times, people still needed credit cards. That's a prime example of assessing and managing risk. Buffett's ability to mitigate risks has been a cornerstone of his success. It's not about avoiding risks altogether, but about smartly managing them. So, remember, my fellow investors, always leave room for that margin of safety. It's like having an umbrella when the rain starts pouring. Stay tuned because we've got more investment gems coming your way. Alright, let's talk about a cornerstone of Warren Buffett's strategy, building a diversified portfolio. It's like having a well-balanced meal, making sure you're getting all the essential nutrients for a healthy financial future. Buffett knows the power of spreading your investments across different industries and sectors. It's like having multiple strings to your bow, so no matter which way the wind blows, you're covered. This diversity helps to cushion the impact of any downturn in a specific sector. Think about it like this: if you had all your eggs in one basket and that basket had a hole, you'd lose everything. Buffett spreads his investments like a global map, ensuring he's not overly reliant on one sector or region. Let's take a look at Berkshire Hathaway's portfolio. It's like a smorgasbord of investments, spanning from technology to consumer goods, finance to energy. This diversification has not only shielded Buffett from significant losses in any single area but also allowed him to capitalize on opportunities as they arise. And that, my friends, is how Buffett's diversified approach has played a pivotal role in his success story. It's about spreading your risk and maximizing your potential for growth. So, remember, when it comes to investing, don't put all your chips on one square. Diversify your portfolio like the pros do, and watch your investments flourish. Stick around because we're about to uncover even more of Buffett's investment secrets. We're on a roll. Let's keep the momentum going. Alright, let's dive into another gem from Warren Buffett's treasure trove of wisdom, the virtue of patience and holding. It's like letting your investments marinate, allowing them to grow and mature over time. Buffett is like the Michelangelo of investing. He sculpts his portfolio with the long term in mind. He's not in it for a quick buck, but rather for the enduring value that comes with time. Take a look at his investment in Apple. He didn't just buy a few shares and call it a day. No, he held on to them, letting the company's value grow organically. It's like planting a tree and watching it turn into a mighty oak over the years. And let's not forget his investment in Coca-Cola. He bought shares way back in 1988 and has held on to them through thick and thin. The result? A return that's sweeter than a can of Coke on a hot summer day. Now, here's the real kicker. Constantly trading in and out of stocks might seem exciting, but it often leads to higher fees and taxes. Buffett's strategy is like a slow-cooked stew. It takes time, but the flavors are richer and more rewarding. So, remember, my fellow investors, don't get swept up in the frenzy of the market. Have faith in your investments, hold on to them, and let time work its magic. That's how Buffett built his empire, and it's a lesson we can all take to heart. We're on a roll. Let's keep uncovering these invaluable investment secrets. Stick around, because there's more wisdom coming your way. Now, let's talk about something that might surprise you. Even Warren Buffett, the maestro of investing, has made his fair share of mistakes. It's like learning from a wise mentor who's been through it all. One of Buffett's most notable slip-ups was his investment in Berkshire Hathaway itself. Initially, he saw it as a textile company, but as the textile industry faced challenges, he realized it was a sinking ship. Instead of cutting his losses, he turned the company around and transformed it into the powerhouse we know today. So, what's the takeaway here? Mistakes happen, even to the best. But the key is in how you respond. Buffett didn't shy away, he learned, adapted, and turned the situation around. It's like a master chess player turning a losing game into a stunning victory. That's the golden nugget here, my friends. It's not about avoiding mistakes, but about turning them into stepping stones. It's about learning, growing, and becoming a wiser investor. So, remember, if the Oracle of Omaha can stumble and rise again, so can you. Embrace your mistakes, learn from them, and let them be the building blocks of your success story. Stick around because we're about to wrap up with some final words of wisdom. We're almost there. Let's finish strong. And there you have it, fellow investors. We've unraveled some of Warren Buffett's most coveted investment secrets. From the power of patience and holding on to your investments, to the art of thorough research and due diligence, we've covered it all. Now, it's your turn to take these golden nuggets of wisdom and apply them to your own investment journey. Remember, success in the market isn't about quick fixes, but about solid strategies and a long-term perspective. Before we wrap up, I want to extend a heartfelt thank you to each and every one of you for tuning in. Your support means the world to us, and we're thrilled to have you on this journey with us. Don't forget to hit that like button if you found this video valuable, drop a comment with your thoughts. And of course, hit the subscribe button and ring the notification bell so you never miss out on more insightful content like this. Alright, that's a wrap for today. Keep those investing spirits high, and until next time, happy